Ladies and gentlemen, good day and welcome to ISGEC Heavy Engineering Limited Q2 FY26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhinav Nalawade from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, good evening. On behalf of ICICI Securities, I would like to welcome you all to the Q2 FY26 earnings conference of ISGEC Heavy Engineering. From the management today, we have with us Mr. Aditya Puri, Managing Director, Mr. Kishore Chitnani, Whole-Time Director and CFO, Mr. Sanjay Gulati, Whole-Time Director and Head of Manufacturing Units. Without further delay, I will hand over the call to management for the brief opening remarks, which will be followed by Q&A. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us for our earnings call today. I hope this message finds you and your loved ones well and safe. We look forward to engaging in a constructive discussion with you. Our quarterly financial results were published yesterday. We've uploaded our presentation on BSE, NSE, and our website www.isgec.com. For regular updates about the company, please visit our website, and you may also follow us on social media platforms like Instagram, LinkedIn, and Facebook. Quarterly financials. The total income for the quarter ended September 2025 increased by 3% to rupees 1,293 crores. The standalone profit before tax for the quarter ended September 2025 increased by 2% to rupees 111 crores. The consolidated total income for the quarter ended September 2025 increased by 3% to rupees 1,725 crores. The increase in revenue was mainly due to increase in ISGEC standalone revenue and an increase in revenue of Saraswati Sugar Mills Limited. The consolidated profit before tax for the quarter ended September 2025 from continuing operations increased by 16% to rupees 136 crores compared to rupees 1667 crores for the quarter ending September 2024. The improvement in the consolidated profit for the continuing operations is largely due to better profits in ISGEC Hitachi Zosen Limited. As you know, a wholly owned subsidiary company, ISGEC Investments Pte. Limited, Singapore, had entered into a transaction for sale of its wholly owned subsidiary, Bioec Energy Holdings 1, Cayman Island, along with its subsidiary companies and associated company, including Cavite Biofuels Producers Inc. in Philippines. The sale transaction, however, could not be completed as the buyer failed to make the required payments. We presently continue to work to sell these subsidiary companies along with the assets. The financial results of the subsidiary companies of ISGEC Investment Pte. Limited are classified as discontinued operations, and the related assets are classified as held for sale. The consolidated profit after tax for the quarter ended September 30, 2025, including the discontinued operations, is rupees 56 crores against rupees 96 crores for the quarter ended September 2024. The lower profit is mainly due to the loss in the discontinued operations. Order booking. The standalone orders booked during September 2025 quarter are rupees 1,208 crores compared to rupees 831 crores in the quarter ended September 2024. The orders in hand as on 30th September 2025 are substantially higher at rupees 7,754 crores compared to rupees 6,160 crores as on 30th September 2024. This includes export orders in hand of rupees 1,644 crores. The order book remains comfortable. The consolidated orders booked during September 2025 quarter are rupees 1461 crores against rupees 889 crores in the quarter ended September 2024. The orders in hand as on 30th September 2025 on a consolidated basis are rupees 8789 crores against rupees 7066 crores as on 30th September 2024. The orders in hand position is strong. The order book is well diversified across various sectors and customers. Market demand. The overall demand trends continue to be encouraging and the inquiry position continues to be robust. Export inquiries have also picked up. Capacity expansion. Expansion of manufacturing capacity for many of our product lines is in progress. As informed earlier, a new manufacturing facility is being set up at Bartoli, which is about 25 kilometers from our existing facility at Yamunanagar. Presently, the shops being set up at Bartoli are for expanding manufacturing capacity in the machine building division. This is expected to be completed by July 2026, and when completed, we expect an additional annual revenue of rupees 225 crores. We have identified skids and modules which are presently being manufactured at our boiler, tubing and piping facility at Ratngarh as a potential high growth area. Our board has yesterday approved an investment of rupees 87 crores in setting up a new facility for manufacturing of skids and modules at our existing land within the plot at SEZ in Dahej. The investment will be done in two phases involving investment of rupees 65 crores in the first phase and rupees 22 crores in the second phase. The expansion, when completed, is expected to give an annual revenue of 160 crores once the first phase is completed, which will increase to rupees 275 crores when the second phase is completed. We are also making further expansion plans for all the manufactured products and are in the process of finalizing further investments required, and we will be informing you about these in due course. Borrowings. On a standalone basis, we closed the September 2025 quarter with a total borrowing of rupees 590 crores and net borrowings after deducting investments and funds in banks of rupees 429 crores compared to a net borrowing of rupees 96 crores as on 31st March 2025. The higher borrowings are mainly due to rupees 462 crores borrowed as ECB loan for on lending to our wholly owned subsidiary company, ISGEC Investments Pte. Limited, Singapore, who has in turn lent it to a subsidiary company, Cavite Biofuel Producers Inc. Philippines, enabling it to repay all its lenders. Consequently, Cavite Biofuel Producers Inc. has no bank borrowing. On a consolidated basis, the net external borrowing is rupees 656 crores as on 30th September 2025, compared to rupees 836 crores as on 31st March 2025. The consolidated net external borrowings have reduced by about rupees 180 crores over the last 6 months. Cavite Biofuel Producers Inc. CBPI, Philippines. As mentioned earlier, we continue to look for buyers for sale of the plant. Meanwhile, the plant will start manufacturing operations for the season on sugarcane feedstock when sugarcane season starts there in the middle of December 2025. My colleagues and I will be happy to answer any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Participants, you may press star and one if you wish to ask questions. Participants who wish to ask questions may press star and one. We have our first question from the line of Palash Jain from ICICI Securities. Please go ahead.
Hi. Firstly, congratulations on a great set of numbers, sir. The question I'd like to ask is regarding your guidance for your FY26, if any, for FY27, regarding CapEx as your margins and revenue.
Yes. So you've seen the half year pass, and for the full year, we do expect increase in revenue and profits in the range of about 7 to 8%. The order book has gone up, if you've noticed. Mr. Puri mentioned in his remarks that the order book has gone up. You have also heard that we are making investments in the manufacturing facilities for multiple product lines. A new facility is being set up at Bhartoli near Yamunanagar. That will help increase the manufacturing revenue once it comes into operation from July 2026. The board has, as you mentioned, the board has approved another investment yesterday, which is for skids and modules. So that factory will come up at our existing location in the H, in the SEZ area, and that's meant largely for servicing export customers. So that will also help in terms of revenue increase. Both of these will obviously come into play in the next financial year. The order book that we've increased now, particularly for the project business. So this order book will be executed over a period of time, and you can see a substantial increase in revenue. A significant, I won't say substantial, it is a significant increase in revenue in the next financial year.
Okay. Thank you, sir. That helps. But can I get a broad range of the quantum of CapEx? Like, just a broad number.
So CapEx that is happening in the next, is about 230 crores.
Okay.
That is now already under implementation.
Okay, that helps. Thank you so much, sir. I'll get back in queue for further questions.
Thank you. Participants, you may press star and one to ask a question. Our next question comes from the line of Amber Singhania from Nippon India Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. Just a couple of things from my side. First is the current order book is pretty healthy at 8,800 odd crore. What is the execution timeline in this? Secondly is if you can just give some breakup, how much is the legacy projects in this which were containing pretty low margin and which was related to SGD and others?
Right. So the order book at 8,000 whatever number, that is the consolidated order book.
Yeah.
Let me repeat the number for you.
8789 crores.
Yeah. So the consolidated order book is 8789 crores. Obviously, that order book is divided between the engineering companies. As you know, there is no order book for the sugar company. Sugar company produces and sell, and so also the ethanol. So now, as far as I'll try and give you a sense of what is the timeline for executing orders. You know that orders vary in execution timeline between, let's say, the shortest time frame is about 3 months. There are, of course, some orders that we also execute in let's say, a month, some particular kind of castings. But typically, 3 months, and the manufactured items can go as far as 12 months for process plant equipment or presses. And for the projects business, you start with the typical sugar plant or a distillery, which is executed over 14 months, whereas a boiler is executed over 20-21 months. And in some cases, the boiler, if there is a number of boilers at one location, it can go up to something like 20 months or so. So there for different products, there is a different timeline. ISGEC Hitachi's Ocean, which has about 937 crores of orders out of this 8789. So it has about 900 crore orders are for ISGEC Hitachi's Ocean. So their typical execution time is 12 to 15 months, 12 to 18 months sometimes for particularly complex equipment that they make. But I guess you were trying to understand how the revenue is going to play out. I think I've already answered that about the revenue. That firstly, for the current year, I've already given a guidance. For the next year, order book is increasing. The manufacturing capacity is increasing, so we are expecting a good growth in revenue and profitability for the next year.
Got it. Sir, and out of the current order book, if you can just give color about how much is the legacy orders pending and by when we are expecting to get completed?
So legacy orders, you are probably referring to the FGD orders and
Yes.
Those kind of things. So we do expect that they will all be completed within June 2026.
June 2026. And how much is the quantum, sir, which is pending execution?
Close to I don't have the figure readily, but it is between 300 to 400 crores.
300 to 400 crores. Fine. And also, sir, if you can give some color about how much is the pending receivables or working capital is stuck in these legacy projects, as well as the earlier executed SGD projects on the retention money side?
So the money is coming out as milestones get achieved. I don't want to be answering specific particular customer order-wise, but sure. I do expect what we classify as milestone-based retention payments. We do expect for these FGD orders about 400 crores to come out by, let's say, largely within the current year, but maybe 40-50 crores will spill into the next financial year. So about 400 crores should come out of these.
Got it. Secondly, this Philippine part, which you mentioned that currently we are still looking out for the new buyer, and we have kept this asset as held for sale. So how one should treat this in the overall context of things in terms of, I believe that plant is operational. So will that get accounted in our numbers, or will that be kept separately? Also, any color you can share on where are we in terms of new potential buyer lookout? Any rough cut guidelines or timeline you can suggest on the same?
So the plant is operational, as you said. The season for sugarcane there typically starts in the middle of December and runs till early April, end of March, early April. So the plant will be running on sugarcane as well as molasses, mixed of stock. Our plant is capable of running on both the feedstocks together. So it will be running on that, and after the sugarcane season ends, it will be running on molasses feedstock. How the accounting will be done? Obviously, there are the accounting standards which specify how assets and operations which are held for sale. They need to be accounted. You have to be disclosing separate line items for that. So that's how the accounting will be done. We continue to have, we are continuing to make efforts to arrive at a sale if possible. Of course, we are preparing to run the thing, run the assets, run the plant professionally and with full diligence. And we believe that will also help prospective buyers to see the plant producing the results that we are guaranteeing. So, but the sale effort is on. We are engaged with a few parties. Obviously, we can't talk about specific names or the discussions or even the timeline. So there are some parties who are doing some amount of due diligence on the potential transaction.
Yeah, I understand. So just wanted to understand, in the status quo situation, do we need to account for any losses in the current books towards this operations? And if yes, how much that could be on a quarterly basis?
So that loss is being accounted, as you have seen the results. In particular, in our consolidated results, there is a line on discontinued operations. There is a separate breakup for discontinued operations. Whatever loss is there is already being accounted.
Got it.
So today the costs are the running costs or maintaining the salaries, the insurance, the plant maintenance, etc., which is roughly about 10-11 crores a quarter. There is interest cost. Now that interest is largely to ISGEC. And there is foreign exchange fluctuation. So those are the three items. The plant, obviously, this quarter's results will show. Next quarter's results will, next quarter meaning January to March, will start showing revenue and normal operation.
Got it.
But it will continue to be shown separately in a line item called discontinued operations.
Got it. Secondly, this order book wise, we already have a decent order file right now, and so was there in the last quarter as well. So just wanted to understand what was the factor which was leading to maybe a slightly muted revenue growth in last quarter as well as last year, because I believe the legacy order is also not too much on the books as of now. So is there any concern on the current order book or current clients you are seeing which are moving slow, or which is not somehow getting converted into the high execution?
So there are no orders where we have any concerns about the orders being. I mean, there is nothing which is on hold. In the manufactured items, we do have certain clients and some equipment that are ready for dispatch, worth about maybe 80 or 90 crores, which the customer is not able to lift because his site is not ready. So obviously, when we account for those sales, it's only when they are dispatched to the customer that is the time you can accrue the revenue and the profits. But we have persuaded the customers to pay us 95% of the money, and we are actually holding those goods where the customer is paying us the storage charges as well. But obviously, that 80-90 crores is not appearing in revenues. In terms of the project business, we have as you can see, order booking. I think the execution is in line with what we were expecting based on the progress for each of the orders. And as I've already said, that the revenue next year is going to be good. It's going to improve a bit.
Noted. Also, sir, in terms of order pipeline or order outlook, inflow outlook, if you can give some color about which sectors are looking very promising, which geographies are looking promising for us, for business towards us as such, and how do we see the sustainability of that same?
So basically, we are seeing a growth in all our product lines except for air pollution control equipment because the recent government guidelines have curtailed the demand for FGDs very significantly. But otherwise, we are seeing a healthy pipeline across most industries. We expect that sugar may be a little muted now because sugar is, as you know, the sugar is probably in a little bit of a downturn right now. But otherwise, we are getting orders from metals, including steel, oil and gas, automobiles, cement. The core infrastructure sectors are healthy, and because we supply to a diverse group of industries and sectors, we are pretty well insulated. But yeah, air pollution control is one area where the order book is muted, bit muted. We have other technologies in air pollution control equipment, and we are looking at some other things to do over there, and we will inform you as and when it matures.
Got it. And sir, the current capacities which we have, along with the new CapEx we are doing, all put together, what kind of revenue we can sustain with this kind of gross block, along with the new CapEx which has been planned, and by when we can see that capacity is getting utilized fully?
So the expansions that we have announced and which I just spoke about, they should be completed by in another 12 months. All the expansions that I've spoken about, and we have said that those expansions are in the manufacturing area, and we are talking potentially of about 400 crores increase in revenue from manufacturing because of that. A little more than that.
Actually,
that's
a little more than that. So if you notice from our consolidated results, our manufacturing revenue for the past year, 31st March 25 year ended, is about 2,500 crores. So I would expect that once all these expansions and the capacity is done, so we should be reaching close to 3,300 crores per year. And there are others that we are also evaluating.
Mm-hmm. Sir, any impact of the ongoing tariff issue with the US? How big is the US for us? And is there any slowdown or cancellation of any order or book or margins impact because of this ongoing tariff issue?
No, not as yet. Not as yet. If these tariffs have a general impact on the Indian economy, it might impact us. But as of now, we have no significant exposure to the US.
Okay. And any thoughts apart from the CapEx? Any thoughts on the inorganic growth or inorganic route to fill any gap in terms of geography or clientele or segment? Anything as such which is there in the mind?
We are always evaluating, and if something comes to mind, we'll get back to you. Something fructifies, we'll get back to you.
Okay. And sir, in terms of product basket as well as our presence, do you think there is any gap in terms of be it geography or be it clientele or be it sectors, which you would be happy to fill in whenever the opportunity comes in?
There are certainly gaps. We are evaluating, but I don't think we can disclose them.
Until something fructifies.
Until something is concrete.
Got it.
Thank you. Our next question comes from the line of Dikshit Mittal from LIC Mutual Fund. Please go ahead.
Yeah, good evening, sir. Sir, can you
Good
give the
evening.
breakup? breakup of the order book in terms of EPC as well as the manufacturing?
Yes, we can give that to you. Give me a second. So we are looking at a consolidated order book of 8,789 crores, right? So in that, the projects business is 6,004 crores and manufacturing is 2,785.
Okay. Okay. And sir, like in the project business, still we are making a low single digit kind of margins, 4-5%. So in the past, we have aspired that will be at least hitting high single digits. So can we expect that the whatever order book that we have currently, the margin profile will be better than what we are reporting today?
It will be better. That's something we are. I mean, we have when we budget, when we bid for orders, we are trying to build in certainly a higher margin profile. And as we have been saying earlier, that we are no longer taking orders with any significant amount of site work. We obviously have to erect the equipment that we supply. We are not taking any significant amount of civil construction or anything. And we are not taking orders which are really long durations. So we're sticking to something like 27 months or so, at max, sometimes 30 months. So the impact is going. If you look at our past few years, the profitability has been improving, even though the revenue has improved only a bit, but the profitability has improved substantially. So I was looking at 4-5 years data, and what I remember is that profitability has certainly improved.
Okay, but sir, like, what is the potential of this segment and in terms of margins, and by when do you expect that we can reach that level?
So the margins in this segment continue to be, unless you're doing, continue to be around 5 to 6 to 7%. That's how the project business seems to be for us as well as for other companies, other competitors. Okay. There is scope to improve if we concentrate only on areas where our only specific engineering skills, for example, the boiler business. But we are also exports is normally an area which gives higher margins. So we have seen for the last few years our exports after COVID were low, and now exports order booking has picked up. It's about 26% of the consolidated order book is from exports. We also have a lot of very active inquiries, which we are pursuing negotiations with certain customers. As the export order book increases, we should be seeing improvement in margin for the project business for exports also.
Okay. Okay. And sir, coming to our subsidiary BioEQ, so basically we reported on 50 crore kind of loss this quarter. But you mentioned that basically fixed costs are 10 to 11 crores per quarter. So is there any one-off in this quarter? How should we take full year?
There is a forex fluctuation loss. There is interest, there is forex fluctuation.
Okay. So, just to understand, you mentioned that season is from December to April. So basically for the rest 8 months, does it, how does
the plant will be operating on molasses feedstock. Molasses will be purchased from sugar mills in the Philippines.
Okay. So, sir, on a full year basis, what should we expect in terms of overall profitability on this company?
So I have the revenue figures for the full year basis, and I'm expecting some close to something like 470-480 crores of revenue for a full year. It will obviously pay for all its expenses. It will also pay for its working capital interest. It will generate some profits of 30-40 crores besides that.
Okay, so maybe next fiscal year there should not be any drag from this company, right? If the sale doesn't go through by that time.
There will be some. I mean, as I said, 30-40 crores is a contribution towards the interest on the long-term loans that we have now given, on the loans that ISGEC has given.
Okay. Okay. And sir, what is the total investment in this company? Like we have given 400 crore kind of debt also in this quarter. So what is total investment as of now?
The total investment, as you can see from the published results, assets held for sale is about 1,076 crores.
1,076. Okay. And like as and when this sale goes through, do we expect to recover this amount, or how the management is thinking, or maybe we can sell it?
So we are working sincerely to sell it and recover the amount. Yes.
Yeah. So, are we open to sell it maybe at a discount also, because then maybe we can focus on our core business going forward? So how do you think that?
I mean, one has to be open for anything, but we are also going to be running it. We are not going to be desperate to sell it out.
Okay. Sir, in case we have to run this company, reasonable 10-12% ROC is possible, or how should we look at that in this company?
I don't have that figure. I can't say, but as I mentioned to you, it will no longer be doing any. There will be no operational loss. It will be actually be throwing up some operational profit, which can be used to service ISGEC's loan, part of the ISGEC loan.
Okay. That's it, sir. Just one request. Maybe after the call, during this month, if you can have a call with you again with our team, I think that will be really helpful, because there have been communication from company side has been quite erratic. So maybe if you can just be more open in future regarding the active communication on this.
We'll certainly look at it, sir. We'll try to schedule something.
Okay, sure. Yeah, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephones. Our next question is from the line of Palash Jain from ICICI Securities. Please go ahead.
Yeah. Thank you, sir, for taking my follow-up question. So, question is with regards to the boilers and process equipment tenders. Are you seeing any pricing pressure in that area? And what is the current win rate in high pressure boilers?
Are we seeing any pressures? No.
We haven't understood the question, sir.
We haven't.
Can you explain the question?
Pricing pressure in the tenders for boiler and process equipment, what is the current win rate?
Boilers, the demand is good. Boilers also is our largest product line.
Okay.
There is always competition, but there is no, I wouldn't describe it as pricing pressure. There's always competition. We have a large part of our project business order book is from boilers. The
competitive landscape, sir, basically.
Competitive landscape for boilers is fine. We have no issues with that.
Okay.
You're talking about process equipment. Yes, there is competitive pressure. There is and orders always come in bunches, but there is competitive pressure. Margins are not as great as they used to be, but we do believe that it's a temporary phase.
So you do believe it will ramp up to and get normalized, right?
So there is a lot of investment happening in India.
Okay.
Our view on the investment in India in the immediate future as well as in the next 4 or 5 years is substantial. Most of our customer industries are going to be investing large amounts. So in capital goods, yes, you do see temporary phases of demand getting concentrated at some point of time and 2 or 3 months of less demand, and therefore pricing pressure. But it doesn't last for long.
Okay. Thank you, sir. That helps.
Thank you. Participants, you may press star and 1 to ask a question. Our next question is from the line of Rabindranath Nayak from Sunidhi Securities. Please go ahead.
Thank you, sir, for the opportunity. Sir, my question regarding this order income. other income, is there any write back of liabilities this year? Last year we had some liability write back. Whether there is some liability write back this year also, because the other income is quite high in this quarter particularly. And the second question regarding this, a couple of participants were asked about this Philippines project. We have invested around 1,076 crore in this project. So whatever discussions you have already had currently, what is the minimum quote you are getting from the buyers, and what is the maximum quote you are getting from the buyers? You can give a ballpark figure in the minimum.
I don't think, sir. I don't think that is a subject to be discussed like this. That subject is not. I mean, what quote you are getting and what not. That is not the subject that can be discussed. Regarding other income, I will answer your question about other income. The other question we can't discuss, obviously. So other income comprises of foreign exchange gain. It comprises of interest accrued on loans given to subsidiaries. These are the two items. There is no write back.
Okay. Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and one if you wish to ask questions. Our next question comes from the line of Arun M.S. from Capital Market Publishers. Please go ahead.
Sir, could you give the split of order book between projects and the manufacturing?
Arun, sorry to interrupt, but you are sounding muffled. If you could please check the device mode that you're using.
Could you give the split of order book between manufacturing and the projects?
Pardon me, sir, we are not able to understand what you are saying.
Could you give the project and the manufacturing split of the order book?
Yeah, I gave it a few minutes ago, but I'll repeat it for you, sir.
Okay.
So I am talking about the consolidated order book of 8,789 crores. So 6,004 crores is projects and 2,785 crores is manufacturing.
Okay.
If you're looking for a breakup of the standalone, I think I can give that to you as well.
Okay.
On a standalone basis, the manufacturing domestic orders is 1,125 crores and manufacturing export is 692 crores. So about 1,817 crores is manufacturing out of the standalone order book of 7,700 crores.
Okay.
And the balance is projects.
Okay. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and one at this time. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments. Over to you, gentlemen.
Thank you for joining the conference. Wishing you all the best. Thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.